Here's how you can get your very first business loan. I mean, this is the beginner's guide to getting your very first loan for your business. Now, look, you might have been told this is impossible, but that's only because a lot of people try to do this the wrong way or do the wrong things and they fail. I'm going to help you avoid all of that in this training. I'm going to give you the blueprint, the framework, the roadmap to actually successfully secure your very first business loan. We got a lot to cover, so let's dive in. So first of all, there's a lot of people are going to tell you that you can't get a loan as a new business. And there's good reason for that because a lot of those people are trying to do the wrong thing, which is basically applying at their bank. So let's start right out the gate with that advice. Don't go to your bank when you're trying to get a startup business loan. Don't get me wrong. Banks have their place in the process. Once you're well established, once you have years of tax returns and collateral and cash flow and all those things, then your bank is going to be a very good fit to get you long-term low-rate financing guaranteed by SBA, but they're not where we start. What you want to do to start is really two things to successfully get your first business loan. The very first thing is right here. It's called fundability. So lenders and credit issuers have a secret set of criteria you must meet to get approved. If you meet this criteria, well, then they start pursuing you. They send pre-screened offers. You start getting automated approvals, but you run into a tremendous amount of resistance if you don't meet this criteria. Now, there's over 120 fundability factors all in all. That's why we have a fundability software that helps you through this. But for this conversation, let's just focus on the basic. They're called foundation. Foundation are the basics of fundability. And this is where you want to set up a separate entity for your business, preferably an LLC or a corporation. You want to have a separate address for the business, preferably should be a real location, a real commercial or retail location. If you don't need a real location, then go to Alliance Virtual Offices to be able to get your virtual office, and that will make it look like give you the perception of having a real business location even when you don't. Get a toll-free number for your business. List your business wherever you can online. Set up a Google business profile, for example. Set up a Bing profile. Set up a Yahoo profile. Get yourself listed in all kinds of directories. Make sure all of the places your business is listed, your information is congruent. The number one reason loan applications get denied is the lender thinks the applicant is fraudulent because your application data doesn't match other places that they go to verify your business. So make sure your Secretary of State, the IRS, all those listings you set up for the business have the correct spelling of the business name, the address, the phone number. It's all the same. Set up a website for your business. Set up a professional email address for your business, like info@yourcompany.com. Now, if you've done these things, take the additional step of getting a license for your business. You can oftentimes get it in your county and setting up a separate bank account for your business as well. Some of the easiest to get financing that exists happens just because you have consistent money going into your business bank account. So this might not be your first loan, but about 6 months down the road, you're going to have the ability to get loans just based on your revenue, but it only works if you have a business bank account. Now you've accomplished one of the two steps. Now you've actually set your business up where you're lendable, where you're credible, where you're fundable. Now what you're going to start to see is you're going to start to see offers through email, offers in the mail. You're going to start to get phone calls from lenders that want to lend you money because those are all the things they're really looking at to determine a fundable business versus one that they don't want to lend to. Now we move to step two. And step two is to understand the banking process based on this 3 C's principle. Here it is. There's 3 main things that lenders are looking at to lend you money: cash flow, credit, and collateral. Now, here's the great news. You don't need to have all 3 of those unless you walk into your bank. You don't want to go into your bank because your bank is going to verify years of tax returns for cash flow. They're going to want good personal and business credit. They're going to want collateral equal to what you're borrowing. You probably don't have that as a startup. So what we want to do is focus on, do we have a strength in one of these 3 areas? If you don't, that's okay. I'm going to give you solutions to work around that. But the first thing we want to focus on is, do we have one of these 3 C's? Now, I imagine since you're just starting your business, you might not have cash flow yet. If you do have cash flow, well, then you want to go to a revenue lending or a merchant cash advance type of loan product. It only requires about 6 months worth of revenue and $5,000 a month worth of revenue. And if you have that, that might be your very first business loan. But let's assume you don't have cash flow because you're just starting your business. Well, some advice: as you get cash flow, don't forget revenue lending and merchant cash advances are there 6 months in. Also, start to have your customers pay you through PayPal, through Square, through Stripe. These are some of the easiest loans you can get. They don't require collateral. They don't require cash flow verification. They don't care about your credit. They just care about the transactions you have in going through PayPal, Square, or Stripe. So try to have your customers pay you through one of those platforms. Again, it might not be your very first loan, but I'm giving you more than you need here because I'm giving you a path to more loans after we secure your first one. And that means by processing payments through PayPal, Square, Stripe, those loans become available again about 6 months into us starting our business. So that is cash flow. Next, we look at credit. Now, if you have good personal credit, 700 FICO or higher, or someone around you does, a family member, a friend, an investor, i.e. a personal guarantor, someone who's willing to be a signer, that will unlock the easiest path to your very first business loan. Well, it's more like business credit cards and lines. It's even better than loans because it's revolving credit. But if you have good credit or somebody else does, you can get a program, and write this down, called Credit Line Hybrid. Now, you can also go to a shortcut and go to creditsuite.com/CLH, which is short for Credit Line Hybrid. Look, I've been in the lending space for decades, and I can tell you this is the best funding program I've ever seen for new businesses, because on average, you get like $60,000, $65,000 in credit lines, even if you just started your business today. There's no cash flow verification. It's no doc. So it doesn't matter if you just started because there's no revenue even looked at for approval. There's no collateral. It's unsecured. So there's no collateral needed either. All you need is good personal credit for you or somebody else, and you can get upwards oftentimes of 50, 60K right from the beginning. We have clients that get over 100,000. You can even get $150,000 in startup funding with this program. Plus, you get rates of 0%, and a lot of the credit lines report to the business credit reporting agencies. So you're building business credit at exactly the same time that you're getting the funding you need to grow your business. Oh, and did I mention that you could take the cash out of these credit lines at 0%? It's why real estate investors love this program, because they're able to go get like 100,000, 150,000 in credit lines, pull the cash out at 0%, use it to acquire the properties, and then use business credit and other means to rehab those properties, furnish them, depending on what they're looking to do, if they're going to flip or short-term rental or long-term rental. So again, Credit Line Hybrid, the best program I've ever seen for startups. That's the second C, credit. Now, the third C is collateral. And when we look at business lending, this is the biggest category of them all, because there's so many assets that you can have that could be used as collateral. So let's look at some of the basics you'd have as a new business: stocks, bonds, 401ks, IRAs, real estate, vehicles, even cryptocurrency. Every one of those things can be leveraged for very low interest rate loans or credit lines to launch a new business. They don't look at your revenue. It doesn't matter if you have tax returns, bank statements. They don't even look at that. And they don't even look at your personal credit. So even if your personal credit is trashed, you're still able to get all of this financing because they're not even doing a credit check in many cases. All you need is an asset that can be pledged as collateral. And here's the best news: even if it's not your asset, you can use somebody else's. So instead of me going to my dad to get money for my business, I can actually use his stocks, borrow against his stocks. He still keeps them invested. He still gets a rate of return. I get a low interest rate credit line I use to fund my business. So again, using asset-based lending, some kind of collateral to get financing, is another door that you can open to be able to get your very first business loan. Now, what if you don't have any? What if you don't have good credit? You don't have a signer. You don't have collateral, anything that could be served as collateral. You don't have cash flow. What do you do now? Well, there's still some options for you. One of the first options is called P2P lending. It's called peer-to-peer lending. And peer-to-peer lending, there's a couple sources you want to look at: Lending Club and Prosper. Now, Lending Club and Prosper both lend on the personal loan side and the business loan side. So if you're looking to get money to launch a business, These are good resources because you can even use your personal income to qualify, still get a loan for upwards of 3, 4, 5 years with a fairly decent interest rate, and use that to be able to actually fund your business. Now, these aren't specified as business loans. They're kind of all-purpose loans. A lot of times you might be on the personal loan side because they're using personal income, but it's still a great and easy way to get the money you need to launch a brand new business. The other thing is crowdfunding. If you have some kind of interesting, unique idea, you could use crowdfunding places like Indiegogo or Kickstarter to be able to raise the money that you need. You can also raise it from people around you, which are called affiliated angels, or you can get money from unaffiliated angels as well. Other investors that love your idea, see a lot of growth potential, and give you money there. Oh, and by the way, don't forget about business credit. Business credit can pay for 90% of what you need to buy in your business. I know it's not a loan, it's high limit credit cards, lots of them, but they can buy 90% of whatever you need to buy for your business. And by building business credit, you make your business more lendable. So by building business credit, you're getting 10,000 at Dell, 10,000 at Apple, 20,000 at Staples, 10,000 at Home Depot. You get the idea. Fuel cards, Visa cards, MasterCards, American Express cards, cards at every major retailer. You're using that to fund your business. You're building a credit profile and score with Dun & Bradstreet, Equifax, and Experian. That credit profile and score will make it way easier for you to get loans and credit lines as well. So there you have it. That is the beginner's guide to getting your first business loans. I gave you many different ways to be able to get either a loan, a credit line, or a credit card as your very first type of financing for your business. Then I gave you the roadmap on things you need to consider to get more money as you start to grow the business, accumulate revenue as well. Hey, if you want to learn more, go grab our guide on 27 killer ways to fund your business. You can get it at creditsuite.com/27. That's creditsuite.com/27. That'll give you 27 killer ways to fund your business. And if you got value from this training, then make sure you like and subscribe to keep your eye out for our next training. We talk about more cool ways to get the money you need to start and grow your business. Thanks for tuning in. Take care.